Good morning, everybody. Thank you for coming today to this GDP of the United States live coverage. We are with the queen of the Forex, recently coming from Japan, Valeria Bednarik,
Hi.
and the only one Forex Crunch guy, Yohay Elam. How are you guys? How are you?
Doing great. Valeria has had a more interesting few weeks, so
Oh, fine here also. A bit of jet lag yet, but hey, here I am catching up with working.
Okay. Okay. Thank you, Valeria-san.
got the one.
Okay. Okay, we are waiting for a GDP. The expectations are 1.2. Let's go into the grain. Let's go into the center. What we can expect today, Yohay, for the GDP?
I think it will be lower, and all the figures we had so far, including yesterday's durable goods orders and retail sales, point to very, very poor growth. The hard data, on the other hand, the soft data points to, the consumer surveys, business surveys point to higher data. The Atlanta Fed estimate, the recent one released yesterday, showed only 0.2. And I think also markets are a bit more in a defensive mode. What do you think, Valeria?
Well, I do agree with you that the market is expecting a not so encouraging figure, given the latest reading, and of course, market behavior. Take a look at the market; it's betting clearly against the greenback, right? That is not supportive for a strong number today. But well, let's see what we get. It will
Yeah.
not be the first, not the last surprise GDP can offer us. Furthermore, this is the advanced figure, so that means it's going to be a bit more relevant at the upcoming reviews that we will get next 2 months, and the market will pay a lot of attention to this one.
Can we get this? This will be the first release. Okay, this is the
Yes.
most important figure. But yesterday we got ECB. Yohay, you and me were in live coverage. What happened yesterday with the ECB?
That was a fun day because Draghi began by being a bit more hawkish, a bit more positive on the European economy, talking about diminishing downside risks. That's positive. On the other hand, 20 minutes later, I think he began talking differently. He said that the ECB is not so confident about inflation, and they still haven't discussed um, the exit strategy. So even if they see growth as getting better, they're not so sure about inflation, which is their mandate. And all in all, we had the euro jumping from just under 109 to 109.30, falling back down to 108.50 something. So that was the Draghi roller coaster. Yeah.
Yeah, but today inflation figures pretty much offset yesterday comments because inflation is at its highest in over 3 years or so. It's up to 1.9, pretty much the ECB target. Core inflation, I believe it was a surprise because it was quite higher, 1.3. If I don't miss the number, I can remember exactly.
1.2. Yeah.
1.2, yeah. Anyway, it was
1.2.
stuck around 0.9, and the previous month came by around 0.8. Core inflation is, of course, much more relevant because it filters volatile price such as energy and food. So it's funny that everything that Draghi may or may have not said yesterday got upset with today's inflation data. But well, that's another reason for further euro gains, right? Particularly, of course, if we are going to see a disappointing GDP in the US. And I do believe that another factor, sorry, that we are not pricing is that somehow the political risk that surrounded the market ever since the year started, or even before, it's starting to ease, right? So that's giving the common currency, the euro, another chance, another bit of backup. Not clear the risks, but at least they are diminishing.
Yeah. I think you're referring to the French elections, I guess, a week ago.
Yeah.
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 And okay. Well, firstly, let me tell people that are watching us. There are questions are welcome. So, ask whatever you want, whatever inquietude that you have, whatever thing that you want to ask us, to Valeria, to Yohay, and myself. Okay, Valeria, I have a question for you. We
Let's
have
see.
been talking in the last 7 minutes how we are getting into the GDP today. what happened this morning, overnight, you know. But I know that you were in Japan in the last weeks, and you were completely disconnected from the market.
Yeah, totally.
Yeah.
The first time in 12 years, I
Yeah. Okay. What are the most different things that you find out now from 3 weeks ago when you left to Japan, when you flew to Japan? What are
to be honest, not that much, meaning besides what I have mentioned, that it seems that the market is taking better the political risk surrounding Europe and the US with Trump. Besides that, I don't notice too much difference in the market. If you take a look, I was laughing because, well, we have this huge gap in the euro, the weekly opening, because of the outcome of the French elections. But the dollar Japanese yen, for example, is trading pretty much at the same level that 3 weeks before when I went out. And the other thing that shocked me, and I have to say I did not analyze it deep, is the reaction of the pound to Theresa May call for earlier elections. Right, the pound is near 130. That's a shock for me, and I have to be honest, I didn't get deep into that matter this week. I hope I have time during the weekend to take a deeper look at the question and the matter. But anyway, what I have noticed is that despite today soft GDP reading in the UK, the pound continues to be extremely resilient to data, and that's something that's telling me somehow that the pound will probably continue recovering ground, particularly if we see a weekly close above 130, right? That will fuel the latest recovery.
a game changer? You see, the game changer will be above 1.30, right? In pound.
Yeah, okay, agree. Indeed, I do believe that whatever happens today with US GDP can be a game changer. If you take a look at previous charts and all the pound behavior for earlier this year, it has been reluctant to give up to dollar strength, and it has been mostly trading on Brexit-related news ever since the year started, right? Ignoring when the dollar rallies on positive news or in, I don't know, speculation that Trump will say something new or different, but nothing more than that.
Okay, thank you, Valeria. So let's go to charts.
Yeah.
Yohay, let's talk about the dollar Japanese yen. What happened in the last 2 days with the Bank of Japan, and then how it affects this particular pair?
The Bank of Japan had its rate decision, but it didn't make any change. They're very happy with the weaker yen. The recent the weekend gap, the jump in dollar yen is mostly related to what we had, the result in the French elections, sort of a risk-on atmosphere, hopes that Emmanuel Macron will become president. We've seen the weekend gap, and we've seen a further advance to the upside. And today, I think, is also a big test for dollar yen, because in many cases, US indicators are best reflected in dollar yen. I still look at 111.60. Used to be a triple bottom as resistance, even though we had a temporary move above that. And to the downside, it's still 110, even though once again we had, after the break, a move above under that level, maybe 109.60. I think if we'll have weak GDP, we could test the downside. And I mean, there's at least more room to move to the downside in the current range.
What do you take on that, Valeria?
I pretty much agree with you. I'm not seeing, in fact, too much of dollar strength against the yen. The rally is based on confidence rather than in dollar gains. I agree with Yohay that the Bank of Japan is confident with weaker dollar yen, but it's still quite poor, the recovery, right? And as I said, it's at the same level that it was 3 weeks ago. Unless it can take 1/12 out, chances of further recoveries are very limited right now. But of course, I have to agree that upcoming correction will depend solely on US data.
We have a question here from the YouTube channel. Our audience is asking about, do you think that it's possible after today's news that USD, GPY, and Australian dollar both go down at the same time?
What, dollar and Australian dollar?
Yeah, dollar yen and Australian dollar, both going down.
If they both go down, seems unlikely because the news is dollar related, right? So the dollar will tend to go in one certain direction, either if the news is extremely positive or extremely bad, at least as a short-term reaction, I mean, right? But what I have noticed also is that commodity currencies are quite weak, while the dollar is consolidating. So it will depend mostly on how stocks and yields react later in the day, and mostly on oil prices. I do believe that the Australian dollar is lately reacting more to oil prices than gold, which is its usual counterpart. But anyway, commodity currencies are weak indeed. And I guess the market was betting too much in base metals when Trump got elected and announced a huge investment in infrastructure, right? And now those prices are giving back. So that's the main reason why commodity related currencies are under pressure also. But no, I don't believe they can go in the same direction.
Yeah, I see one scenario in which they can go in the same direction, but we would need a really horrible US GDP figure, a contraction of 1% annualized or more. In that case, I can imagine a situation where dollar yen falls because the dollar is weak, of course, GDP and safe haven flows into the yen, and also general risk-off situation, and that pushes the Aussie dollar lower, as the Aussie is a risk currency. But even if we have 1% contraction, I'm not sure this is the reaction we'll see, as I tend to agree with Valeria about dollar moving sort of across the board in the same direction. Yeah.
Okay, so we got another question here. I think for you, Valeria. What time chart, time frame, I guess, are you trading it most for news events?
No, I keep my charts in the 1 hour time frame when we have news, and I don't trade them much. I wait until the market adjusts and set the direction, right? Maybe the minimum is 15 minutes, 30 minutes, not going with the initial market reaction. I need a confirmation of such before taking a trading decision.
Yeah, I wanna share here a page from our calendar. Yeah, in the gross domestic product annualized, you got some charts. If you click inside the event, and you will see the true range. There is in the true range, you can see how big is the impact usually after the release. So if you see the 15 minutes range, you will see that in the last, it's the average is like a 15, 50, 25 pips, 30 pips, but it comes higher if you go to 4 hour in the 4 hour fragment, 4 hour range or 1 hour range. So the initial impact is not that too much, but you can trade better if you wait a bit, and then you can trade later. You react to the reaction.
Exactly.
You don't get stuck into the reaction. That was I wanted to share with the audience. So, Valeria, I saw that the British pound is just a testing highest. Testing high from the last, since September, I guess.
September, yeah, I do believe it's September.
What is your take that?
Well, as I said, I do believe that the pair is bullish and will probably continue rising. Of course, it's now waiting for confirmation from the US GDP data. If the numbers are disappointing in the US, well, the rally will be contained. But I don't think that the pound will fall sharply because, as I said earlier, pound is quite resilient to dollar positive news lately. So the most I can see is a minor pullback towards probably 29 or so. In the case, sorry, that data is really disappointing, I would expect the pair to break above that 29.60 high and rally up to 130, 130.10. 130 is a huge psychological figure, so I'm not sure if it will be possible to be broken today. But if we reach that level with GDP data, remember we have later in the day the Michigan Sentiment Index, right?
Yep.
And if that disappoints again, then maybe we can get another bump.
What is your opinion on that, Yohay? What we can expect in the next days for the pound?
Well, the pound went back to the bottom of the previous range, the range in the summer, immediately after the EU referendum and before the second crash in October. Yeah, the pound is showing a lot of resilience, still hoping for a soft Brexit under a new government formed by Theresa May after she gets mandate, after she kicks out those Brexiteers. And this overpowers, at least for now, the reality, which is that Brexit is beginning to bite. As Valeria mentioned, GDP disappointed. This was clear to see also beforehand with the retail sales disappointments. Yeah, 130 is a very hard psychological level. I see above that 130.50, 131.30, but maybe the pound already made its big moves. I think it'll be hard also to break above 130. We'll need a really disappointing GDP number in a few more minutes. 10 minutes.
Yeah, go ahead.
Just one thing. Remember, today is the last day of the month, so we usually see some profit taking, right, by London close usually. I will be closely watching price action in the pound at that time, because if the pound does not get hit by profit taking today, that will be a signal that the pair could continue rallying quick.
Yeah.
That's true. That
was a big short squeeze in the pound.
Yeah, some rebalancing. Okay, we got today is the last trading day of the month, but also we will get Canadian GDP, right? We have a question here, about the what will be the reaction if the Canadian GDP is higher than the US GDP. What will be the reaction in dollar, and especially in Canadian dollar?
Well, Canada releases the GDP monthly basis. I'm not wrong. Yeah. We're expecting a quite negative reading today, 0.0%, sorry, against previous 0.6. I don't believe it will be a shock enough to see GDP in Canada near 2%. I guess this is a quite unlikely scenario, right? Given it's monthly, we would probably remain within the usual range of 0.4, 0.8. Really not expecting much there. I do believe the CAD is affected by the weakness of commodity currencies we mentioned earlier, and oil prices, which cannot seem to not be able to recover above 50, right? So I don't see such a scenario. But anyway, if in the case Canadian GDP came stronger than US GDP, we may see an intraday corrective movement that will probably be exacerbated by profit taking because of being the last day of the month. But still, the pair is clearly bullish and will probably continue with that trend.
Yeah, trend is bullish, and we talked earlier about Aussie dollar, and I can't understand all the moves in the Aussie dollar and the Canadian dollar. It's much clearer. We're at a 14-month high because of mainly, three reasons. First is oil prices. They are currently, at least WTI, still under 50. Doesn't look to be rising anytime soon. That's a sort of the immediate culprit. We had this week all the talk from Trump, the timber tariff, talk about how Canadian politicians are outsmarting American ones, terminating NAFTA, which was later denied, but a lot of damage is done.
Yeah.
And sorry?
Yes, sorry, I agree with you with that. I forgot about that, but I agree with you.
Yeah, and another thing sort of lurking in the shadows is situation in the Canadian housing. And we had, I think, last year, some measures introduced by the provincial government of British Columbia to tackle rising house prices in Vancouver. And now we had some measures in Ontario to tackle rising house prices in Ontario. And there are some initial signs that prices might begin falling over there, and that could hurt the Canadian economy and the Canadian dollar. But sort of the big story of this week is, of course, Trump.
Okay, thank you. Yohay, in coming into Trump, you know, we were talking yesterday about that threat about the customs and review NAFTA, and he's also saying that he will review the South Korean agreement too, and the Trans-Pacific. You know, how it can affect in the long term to the dollar. Do you see in the long term that the dollar can grow further, or it can go down? I see that the Dixie is right now testing the 98.71. What is your take on that in the dollar, in dollar index? Yohay.
Oh, I don't follow the dollar index that closely. It is falling in general, but it's mostly, I mean, the biggest weight here is the euro. In any case, since Trump was inaugurated, the dollar has been sort of mixed, a bit weaker against majors, stronger against commodity currencies. And but in general, after the big rush, after the elections, the dollar is not going anywhere fast or more. The trend is clearly to the downside after that big rush. So if Trump continues with trade wars and does not introduce infrastructure spending and this tax program that was only a one-pager on Wednesday, if it doesn't turn into any kind of reality, then all the expectations, all this Trump train growth will fall. I think there are also other kinds of damage Trump can do. Tourism is beginning to fall, but that's a very small part of the US economy. And so I don't think, and of course, if Trump, again, to your question, if Trump continues with threatening trade agreements, then it's bad for the US economy. The Fed will not raise rates, and the US dollar will fall. But you never know with Trump, right? So maybe things can turn better. I mean, some of the worst predictions for his presidency haven't happened yet. There's no wall. So who knows? Really, who knows?
What is your take on that, Valeria?
There's no wall. That's funny. You know, I do believe that Trump is doing a lot of damage to Greenback, and he's not over yet. To be honest, he made so many promises, so many. I don't know how to say this, but I do believe that he had no clue the kind of things he was going to face being the president of a country, and not to mention the largest economy of the world. See what happened earlier this week with the tax reform announcement, right? They made so many noise around it saying, yeah, we're going to make a huge tax reform. And pretty much they said nothing. They went against their populist campaign, cutting taxes much more for the richest as the first thing. And they didn't say where that money is going to come from, right? How is he going to cover the deficit? It's not, okay, I will change taxes and I will cut them by half and that's it. It's not like that. I think she thought something like it will be that easy. And, well, it's not.
Yeah, they are not presenting plans. They are just making decision, randomly decision, because I want to have a lower corporate tax, but what that means, you know, you need to make a plan because you have to collect that money that in other ways.
Yeah. No, nothing.
Okay, yeah. 3 more. Yeah, go. Sorry, Yohay.
No, there's a general agreement that the U.S. tax code is very complicated, very messy, the top rate is too high, 35% corporate tax, but there are so many loopholes that companies can avoid paying tax. So the idea is to simplify it, and then I mean to broaden the base, and then you can lower the top rate. But
yeah, but you can say that.
sure.
But sorry, but you can say that. Okay, let's cut corporate rate to 15%, and then no deduction. Yeah, you can say that. Okay.
Yeah, but one page didn't fit into one page.
Exactly, exactly.
So we didn't hear that. So
yeah, it's not a plan. Okay, 3 more minutes, and we are gonna get the GDP release. What we can expect, Yohay?
again, expectations stand on 1.2, 1.3%, lower than 2.1 in Q4. The Atlanta Fed showed only 0.2. Other figures such as durable goods orders released yesterday also point to lower US growth. And yeah.
And in terms of Forex movement, Valeria,
Yes.
what we should focus the most?
Well, I believe that, of course, it will depend on the outcome. As I said, I believe that negative reading could favor the most British pound. A positive number, on the other hand, may hit the euro and the dollar and the yen, right? But I will focus on those three particularly.
Okay, thank you. You know, in terms of euro dollar, what are the levels to watch? You know, in the downside and the upside, what will be the most likely selling and buying zones?
What, sorry?
What will be the most likely selling or buying areas?
I do believe that the euro needs to break below 890, in short term, I mean, to correct down to that 850 region, which has been attracting short term buying interest in the last few days. And I also checked the low of this week is 820, right? So, and 820 also stands for the 50% retracement of the post US election decline, right? The one where we have late 2016. So that's a key support. Which I don't believe it would happen, but if the pair breaks below the level, then there's a good chance it will fill the weekly opening up and fell down to 730. Maybe not today, but in the upcoming sessions.
It's a huge spike there.
Okay, we have the numbers coming out very soon.
Oh,
okay.
yeah.
Let's see if we get something to work with.
0.7, below expectations.
0.7. Yeah, below expectation.
Well below expectations of 1.2, right?
Okay, disappointing number.
Yeah. The dollar Japanese yen is the first to react to the upside. And the euro and the pound are also using partially, despite the bad number, but nothing really serious.
No, but the dollar is rising.
Yeah, the dollar is generally higher.
Yeah, that's. I guess markets were expecting the real expectations were probably lower. So
the GDP price was higher than expected.
Yeah. And the reaction has been quite modest.
yeah, GDP price index 2.3, core PCE 2%. Let's see the consumption and other things. So far, below expectations, below official expectations, but maybe above the whisper numbers. Yeah. So
Nothing is really offering a real trading opportunity. We are trading within previous range, no big moves, no shock.
I think that the dollar raising could be more in line of closing position, taking profit for euro ahead of the month end.
Still, the number is pretty ugly. So
Yeah.
there's
yeah,
not of a chance of a dollar rally, and we said maybe some profit taking, but that's it. If we're taking some positions, if the euro holds around this area 920, 930, it could continue rallying after the market adjustment. Stocks are hardly reacting, no much moves ahead of the opening in Wall Street with the number.
Okay, the dollar is now retreating after the initial rush. So on euro dollar, actually the dollar is falling now, just a few pips. Dollar yen still higher than before the release. So we have more data. Personal consumption is up 0.3 against 0.9 expected. That's bad news. Employment cost index 0.8 instead of 0.6. Yeah, another comment. This is the 0.7 is the annualized figure. So it's basically 4 times the quarterly figure. So we have hardly 0.2% in comparison. We had the report today about 0.3 in the UK, 0.3 in France, 0.7 in Spain. So to put things a bit in context.
So it wasn't huge.
It wasn't tremendous.
It wasn't tremendous. Okay, PCE price index at 2.4, core PCE at 2.0.
Yes, the market had already priced in a disappointing number. Here we are. But somehow this behavior with the dollar as it slows against the euro and the pound, it's anticipating another bullish week for the next one.
Yeah, you know, we were getting a really busy week this time with ECB yesterday, some Trump news in the previous days, and we are heading to Northern payrolls next week. So maybe people are a bit tired. They are waiting for more development, and then we will get the French election next, not this weekend, but the next weekend.
Yeah, we have the Fed decision.
And the Fed decision. Yeah. Busy days, guys.
Yeah. Sell in May and go away, right?
Exactly. Okay, so guys, what are the frontiers, you know, the next levels to watch in the dollar Japanese yen in the upside and the downside, Valeria?
To the upside, the high we've seen this week around 11.75 or so. Above that level, I have 112.10, and beyond that level, 1260. I don't see it going much more higher than 112 today, particularly because despite this whole movement we're seeing right now towards the upside, I don't see how the dollar can gather enough momentum to break higher after this number. And to the downside, 111, of course, is the base because approaches to that region have been attractive buying interest. Followed 110.15. That's my next support.
Well, something that is getting down is the gold.
Okay. The dollar is rallying.
Yeah.
The euro is at around 900.
Yeah, the DIX is just going above 99.
Yeah. My only explanation is that markets were bracing themselves for an even worse number than the official expectations because of yesterday's figures, because of the Atlanta Fed. And it isn't as bad, but in absolute terms, 0.7 annualized growth is not good news, especially after a very poor 2016.
How was the data in Canada?
As expected, GDP was flat, 0.0%. Sorry.
Okay. Oh, sure. Yeah. Okay. What do you think about the gold, Valeria?
Oh, gold, it's another reflection of what I was saying about diminishing fears around the market, right? Because it's pulled back. 1260 has been the base so far this week around time. I don't see it like we have topped and there's farther downside in the air. It's just a downward corrective movement. I believe that we discussed this multiple times in the past. Breaking through 1300 seems unlikely in the current scenario, but downside it's also limited. So I'm expecting some further range trade and modest upward advance for the upcoming days, short term, and given the profit taken and the dollar seems to be appreciating, there's a good chance that we can go down towards 1255, 1260 today. But not seeing that as a sign of further or sustainable falls, you know.
What is your take, Yohay?
On gold.
Yeah.
Yeah, it has, I think, a bit more room to the downside. Hasn't been that. I mean, it had its good days, but immediate support I see here 1240. In general, well, I don't follow gold that closely. It's not moving. It's not as exciting as it used to be. But anyway, the wider range, 1240 to nearly 1300, we got close to that. So there we are. So
Okay.
US GDP reaction, slightly stronger dollar, but not much.
Okay. Let me check if we have some question. Well, we got a US GDP question from here where, but we already answered that. I don't know if you guys want to add something on the Japanese yen behavior.
Not really. It's below the weekly high. At least it's the market is probably focusing a bit more. It's now, I guess, right? Because I don't see why, but in higher prices within the GDP report, right? As a sign of rising inflation and maybe building up hopes of a rate hike in June. I don't know. I don't believe that, but I guess that's what market is reading from this report to justify this partial dollar strength. Anyway, it may have something also to do with with profit taking. But given that the dollar is moving in the same direction against of its rival, I did believe that it's more related to inflation and upcoming Fed meeting than anything else.
Okay. Let me check for more question here. No, we don't have question right now. Okay, so Yohay, your hypothesis is more regarding the Atlanta Fed that they say something, yeah, they say they were expecting a lower figure and the market pricing in before.
Yeah, and we were talking before the data was released that looks very poor because of other figures that we learned, like yesterday's durable goods orders. Before that, we had retail sales that weren't impressive. So I guess maybe the US dollar was in the back foot expecting a worse outcome. And that's why we're seeing the US dollar a bit higher. Again, it's not a huge move. I would expect the absolute figure to eventually have the last word, unless, I mean, we'll have also political events anyway, but in absolute terms, it's the worst quarterly growth rate in 3 years. The US economy is moving very, very slowly, less than 0.2% quarter over quarter, 0.7% annualized. It isn't good news. I wouldn't expect, I mean, we're currently seeing the dollar move a bit higher, but I wouldn't expect any sort of rally. I would expect more probable scenarios that we'll have a reversal of this most recent US dollar rise.
Okay, thank you, Yohay. So let's take a look to the oil, to the crude. What is your take on that, Valeria?
Oh, well,
Oil.
yeah. No, I was not around when commodity spiked to 54, so I'm not pretty sure what happened here. But right now, I see the commodity pretty much under pressure, right? Back to the 50 comfort zone. I don't see an upward potential, to be honest, particularly after yesterday news showing that Libya restart pumping in a couple of oil fields and adding to the ongoing glut. I guess the market has already priced in and just whatever the OPEC cut may mean to prices, and therefore the chances of another spike higher are quite limited. I guess the attention now is focused on U.S. stockpiles. As long as U.S. stockpile came or remain at record levels, there are also limited chances of a rally. But I do believe that the 45, 52 range is the one we should play. Now we are midway there, not with clear signs because we're neutral in the forward charts. But I will be playing that range only if I have to, because the spike up to 54 may have been unjustified short term.
Okay, and Yohay, what are the most important drivers right now on the oil?
The what? The levels?
Yeah, the drivers. What is
The drivers. Well, the biggest question is if OPEC and non-OPEC countries will extend the production cut deal. You'll remember began in the beginning of 2017 and runs for 6 months. That means it's going to end in 2 months. So they'll probably extend it. So far, Saudi Arabia is doing more than it promised. The other OPEC countries are not really cutting production as much as expected, but the total for OPEC, thanks to Saudi Arabia, is okay. Non-OPEC countries are moving slowly. It's mostly Russia. And what we're seeing in terms of production and inventories, the weekly reports in the United States, the general trend is that production is rising. It's 9.25 million barrels per day, I think, US total production. Inventories, well, they go up and down, but all in all, there's just too much oil running around, and I see this fact capping oil prices. So we might not see a collapse at the biggest levels. Well, 47 was sort of a big bottom for oil prices, but I cannot see oil prices going up either. So yeah, we're sort of in the middle of the range or in the lower end of the range. Any attempts to move higher, I think, will end relatively quickly.
Okay, and moving into one of the most related oil currencies, which is the Canadian dollar. Let's take a look to the Canadian dollar. What is your levels to be watched there, Yohay?
Well, we're currently at the highest levels in 14 months or 15 since the beginning of 2016, when WTI oil reached $26 at one point. So then we had the dollar CAD reaching 147. So if we look, I see resistance only here at 138.50, followed by 140, which is of course around level. But we didn't have the pair trading too much at those kind of levels. The downside is a bit clearer, of course, because these are levels we've seen recently. So I see strong support at 136, and then we have 135.35, 134.60. But I think the trend is towards the upside for dollar CAD against the Canadian dollar because of oil, because of Trump's talk about NAFTA, and also because of the Canadian housing.
And your opinion, Valeria, what is your take on the Canadian dollar? Do you see the Canadian dollar can go higher, 1.40, or then? What do you think
Yeah,
about that?
as I said earlier, I do see a clear bullish trend in there. I do agree with Yohay that probably one of the main drivers affecting the CAD today is the damage done by Trump
Oh.
with the NAFTA announcement. the pair is pretty much trading a 1-year high, and with oil prices weak and with not much chances of higher oil prices, I don't see the case for a stronger CAD, right? It has broken above a major resistance this week, so I do not see a probable approach to 140. I don't discard that.
And into the downside, where is the line of the sun? The line of the sun, sorry, just to make like a game changer. Okay, right now we are
34.20 could be the first big long-term support, that region for me. And below that, I believe that 32.50 or so. Those are the big levels that the market needs to know now. Meaning the pair can pull back around 200 pips and still be bullish.
okay. And then we got the Japanese yen, the dollar Japanese yen breaking up, going.
Yeah, still a couple of pips below the weekly high, but advancing. Stocks are neutral yet ahead of the opening.
Yeah, and then also the euro Japanese yen is testing highest. Yeah.
Yeah, here is strong.
Okay, guys, what do you think to make a wrap up? Let's let's explain people what happened today and what we can expect into the next week, where we will have the Federal Reserve interest rate decision and non-farm payrolls. Okay, do you want to start, Valeria, ladies first?
Well, I guess what happened today is that the US GDP was a disappointment, but the market was pretty much expecting so. And the market is more focused on higher prices and the possibility of higher inflation in the US rather than the disappointed figure. Also, it's the last day of the month, so we are seeing some profit taking across the board, something that could accelerate in the upcoming hours. But pretty much, I see the dollar weak against its European rivals, stronger against commodity currencies. Overall risk has diminished. That's why we see a weaker yen and a weaker gold. And of course, next week will be huge with the Fed and non-farm payrolls after the Fed. The fact that the non-farm payrolls are a couple of days after the Fed could diminish the importance of the non-farm payroll report at the moment of release, next Friday, I mean. But anyway, I guess the market will wait for the Fed, particularly because Monday is a holiday in Europe. So I do expect little for the first half of the week. And pretty much that's it. Market will wait for the Fed and when they will rise rates again, right? That's the market focus today.
Okay, thank you. But we don't expect any hike this
No,
time, no? We don't
no,
have Jelen
it will
conference.
it would be great because it will offer huge surprise and wild movements and changes everywhere, but nah, we don't expect such.
Okay, thank you, Valeria. And Yohay, what is your take on what happened today and what will happen in the next days?
Well, we had 0.7% annualized growth, the weakest level in 3 years. In absolute terms, it's a bad figure. It also came out below expectations, but I believe that real expectations were even lower. The result is a small uptick in the US dollar across the board. We talked about the Fed. The big question is, will they hike in June or not? I think the figure we had today is not a smoking gun against hiking in June. I think they'll keep all the options open on the table in their May meeting. Again, no expectations for a rate hike. If we get another confirmation of this weak growth, a weak non-farm payrolls report next time and the next one, then we will not have a hike. I think last time I checked, markets still expect a hike in June, but it's really 50-50, or close to 50-50. So today's figure doesn't help, but not if we would have an outright contraction or zero, then I could say, okay, I don't see a rate hike coming in June, but still on the cards. We will need more bad data to rule that out. At the moment, it's open to speculation. And yeah, end of month flows, as Valeria mentioned. Watch out for that today. And tomorrow, next week is a very busy week.
Yeah, and tomorrow, right? We don't know what you are going to do tomorrow, so maybe it's busy or not.
Going to enjoy the weekend. Yeah.
Yeah. Okay, guys, I think it's time to go. Thank you,
Yeah.
Valeria. Arigato gozaimashita, Valeria-san. And thank you, Yohay, for your time here, for your time yesterday. And see you next week on the Federal Reserve interest rate decision live coverage, right?
Right.
Thank you, guys. Bye-bye.
Okay. Bye, Valeria. Take care.
Bye.
Yohay. Take
Bye.
care. And see you guys. Trade safely and take profit and pay attention to rebalancing, as Valeria said before. Bye-bye. Peace and love.